Hey everybody, Bill Prince here again, and welcome to week 10 of Business Simulation Workshop for fall semester 2019. This week and 5 to go, and then the semester is over. It's hard to believe that things are zipping by this quickly, but they are. So let's kind of talk about a few things this week. This week, covering the week of October the 28th to November 3rd, you will be uploading your round 3 decisions to CAPSIM. This week, the TQM comes into play, and I will show you what TQM does here in just a moment. Additionally, you will be uploading your round 2 SWOT debriefing decision. And again, as I indicated in the announcement this week, please get those in if you're not doing that, because this is the way that you get your points for the simulation. Again, the grade in the class is not based so much on how well you do in the simulation, but the fact that you've done the simulation and kind of assessed your strengths and weaknesses and things of that nature. And if you don't submit those SWOT debriefings, there's absolutely no way I can evaluate your work on the simulation. You won't get points for it, and that could be problematic come the end of the semester. So make sure that you get those in if you have not done that already. And then we will continue on with our work through the Page West strategic management text in the week 10 assignment. Also wanted to mention to you that this week's discussion question, I've changed things up just a wee bit. First and foremost, we're going to be talking about professionalism and in particular dress codes, which I can tell you in managing an office of about 100 folks, this can be an issue that just sucks the very life out of you when you see people coming to work in outfits and in conditions that you just really can't imagine. And so many workplaces try to avoid that or mitigate those issues by coming up with a dress code, and that can be an incredibly difficult process to come up with. So that's what we're going to be talking about this week. Again, note that this week you're only going to be required to post your initial response and one reply. I want you to be able to have a little bit more time to work on the simulation and things of that nature. And then let me tell you a couple of options that you can have for replying to this question. Maybe some of your other classes have utilized this up to this point, but this was an upgrade that Moodle did not all that long ago. But that is to allow audio and video postings essentially. And so one thing you're going to see this week is when I go through and review the SWOTs that you submit, I'm going to review those orally as opposed to in writing. Give it a try this week, and I want to see and I want some feedback from y'all as to whether or not that is helpful, or would you rather me just type my notes about your performance. I'm going to give it an oral try, and we'll see what happens there. So let me know. But when you do your discussion questions, you really have 3 choices in terms of how you want to reply. I would encourage you to do one or all 3 of these if you like. But the way that you can do it is you can, of course, do it the traditional way where you respond via typing and writing into the text box. Another way that you can respond is orally, and that is accomplished simply by clicking on the little microphone icon here, clicking Start Recording, and then you have the ability to record up to 2 minutes of audio. And again, that should be more than enough, I would think, to respond to a discussion question or post. So feel free to give that a crack if you would like. And then the third option is a video, that you can actually video yourself responding. I'm not going to actually go on and start recording because you do not want to see me in my unkempt state at this time of the morning on a Sunday morning. I'm still kind of not put together yet. So in any event, I will not hit the click recording button. But if you do hit that start recording button, it will put up a little box and your face will be in there, and you can record. So, again, I would encourage y'all to try, these other options in responding to posts. Sometimes you can do it, if you're out and about and don't have access to a keyboard. I think you can access this from your Moodle app on your phone or your tablet. and do a quick response, and bang, you're done. So in any event, let's give that a crack and see how that might work. Okay, let me talk about a couple of issues this week in the simulation. I'm going to go here to the Capstone app, and I'm going to go to this is my kind of professor play along page that I haven't been playing along a whole lot this term, but a couple of things that I want to talk to you about that I notice in the results of those of you who have been having some struggles ending up with big emergency loans and things of that nature. And first of all, this is the finance page, and so this is the page that really you should be doing last, because you will have invested in all your plans, done your R&D and all that kind of stuff, and you're going to see here, here's your cash position as you're going into this year, and then this is your estimated cash position going into the next year. So if this is red, you do not want that to be red. You want that to be black, and you want that to be somewhere between $8 to $15 million. That's what I've always found generally will protect you against a big emergency loan, unless something really bad has gone wrong. So make sure that you engage in financing activities, and it's always been suggested in the simulation that you do that in this order: current debt, long-term debt, and then stock issue. If you kind of wait a while to issue stock and your company is doing well, you can really get that price per share up there, and then really raise a bunch of money without having to issue a ton of stock and not impacting your earnings per share, and that sort of thing. So current debt, long-term debt, and stock is the best way to do it. But you don't want to upload your decisions when your cash position going into the next year is in the red, because that usually will spell the sign of a big ouch. And then also make sure that you're looking at your pro formas. I always like to look at this income statement. And again, what you want to do is you want to look down here. And again, keep in mind these pro formas are simply numbers that have been calculated based on what you have done within the context of your decision making in the simulation. These are not tied into what the other companies have been doing and that kind of thing. But it can give you some pretty good ideas. So if you're looking down here and you're showing that you've got a profit, not a huge one here, but again, I haven't really made decisions this round, but it is in the black. And then you can see that my net margins and each of these products are in the black and good. That looks pretty good. If you look at this and these are red, then you're going to want to go back and you're going to want to either raise the price, you're either going to want to maybe cut back on R&D a little bit, cut back on marketing or sales budgets, that kind of thing. But ideally, you want to try to make sure that these are all in the black, so that when you get back to the financing page, your numbers are in the black there and not in the red. So make sure that you do that. Another issue that I sort of noted that people were having some issues with was pricing of the products. Now, let me go to decisions here, and again, remember you're going to set your price in your marketing page right there, and again, remember that the price is going to be based on the buying criteria. So let's go to the courier. Let's just go to the traditional segment here for a sec and take a peek at that. There we go. Yep, there we are. And again, remember, age is never going to change. They're always going to want it to be that age. Reliability is never going to change. It's always going to be they're wanting it between 14,000 and 19,000. Performance and size, the positioning on the perceptual map, that will change. Remember, and you can get those drift rates through the industry conditions report, and price is going to change every single round. So every round, this will go down 50 cents. So this round, so at the end of round 0, which is right here, customers would have wanted to pay between $20 and $30 a unit for my traditional product, which is, I think, Able. So as I set my prices going into next round, I want to remember that they're going to want to pay between $19.50 and $29.50. So you want your price to fall within that window. The next round, when you set it, it'll be $19 between $19 and $29 and so forth. So 50 cents around. And this is the same for every product that you will be dealing with. So what I saw a number of folks do is in their pricing, they actually set the price of their product outside of this window. And when you do that, customers will not buy the product. That's just written into the simulation that if you are over this, the maximum price that they will pay, they will simply not pay that price. So make sure that you fall within the pricing window. Again, you can go up or you can go down, but make sure that you're within that $19.50 to $29.50 range in making your decisions in terms of pricing. And then again, this round as well, TQM is going to come into play, which of course is not here. Okay, let's see here. Let me see if I can find. I'm just going to go in and find somebody's page. There we go. Whoops. Return to professor course. I'm going to, let's see if I can find somebody here quickly who has gotten the next round ready to go. Oh, still in there. Okay, let's go back here. I'm going to go because this class has already processed that. So let's see. Log into a team. Log into that one. There we go. So you should have, when TQM comes into play, a TQM module tutorial quiz pop up. Again, you're not required to do that for points, but it'll certainly be helpful for you in terms of telling you what to do. So I've logged into that team. All right, so let me go to the decisions and the spreadsheet and decisions, and there's TQM. Okay. So you can see that this team has already made its TQM decisions for the upcoming round. Again, this is another course. So, but what TQM does is it allows you to kind of get into areas where you might be struggling with, and get some things changed. And you can find what each of these TQM initiatives does by clicking the little information button. So this one tells you that if you invest money in concurrent engineering, that those expenditures will lead to reduced R&D cycle time. So when you are making your R&D decisions on your R&D page, what this will do is it'll speed up the time that it comes out. So you may have created a product that'll come out in July of this year, and by investing in this can actually move it up maybe to June or maybe to May, depending on how much you invest. But you can see right there that based on your investment then, it will tell you in the worst case you're going to speed it up 4%. In the best case you're going to speed it up about 5% or 0.5% of the time. So, and then you can go through each of these little things, and they will tell you again this will reduce cycle time. Some of these will increase demand. This one will reduce costs in materials. This will deal with administrative and material costs. Some of these will just increase demand for your product. So you kind of go through each of these. And then you want to make sure that you invest the right amount of money. So really below 5 million is not going to, or 500,000 is not going to do much of anything. On the other hand, above a certain amount, as you can see here, if you spend more than 1.5 million a year on the initiative, you're going to have diminishing returns. And remember that these returns are sort of cumulative each week. So if you end up spending more than 4 million on any particular initiative, you're going to have diminishing returns. So you want to, kind of as you calculate this, between 500,000 and 4 million is where you sort of want to be. Again, assuming you have the money. But again, these can really, really help reduce reduce your costs, increase your demand, speed up getting a product to market, and that sort of thing. So I would really spend some time looking at this when this decision becomes available to you. So, in any event, those were kind of the big things that I saw was again apparently going in, not engaging in financing activities, and then setting your prices too high. So, again, we're going to try the oral reports back, where I will give you sort of an oral critique of your round. Let me know if you find those valuable, or if you want me to go back to typing those out. I want to do what's most efficient for you all. Have a great week, and we will see you guys next week. And as always, let me know if you have any questions, comments, or concerns. Take care.